cut 17 years off the payoff of my loan, of my mortgage. And so it's really about the interest that you're paying and not the interest rate.
This 8% loan calculates interest differently, and it's actually going to save you like $300,000.
Yeah, and that's just for people. It's just like
anyone thinking competition instead of collaboration in the financial space, the only person that suffers is the client.
learning strategies that I can now help my adult kids so they're not in the situation that I found myself in.
That if we're saying the economy isn't what it used to be and the job market isn't what it used to be, why are we still using the old tools?
Most people are told that success looks like buying a home, getting a mortgage, working hard, and saving money, and hoping that it all works out. But what if that system, the very one we're taught to trust, is quietly keeping us stuck? Today, I'm joined by my special guests, Sarah Herrera and Monica Goodpaster, two financial strategists who have helped people like me and you save thousands of dollars through financial strategies that the millionaires and billionaires use, but they often don't share it with others. So half the battle is just understanding the options and knowing what's available so that we can make better financial decisions and get out of our debt and be successful. Monica and Sarah, thank you so much for joining me today.
Yeah, thanks for having us here.
Yeah, thank you so much. It's great to be here.
Yeah, it's a pleasure. Well, Sarah and Monica, and you guys can pick who goes first, but
we're used to it. Yeah.
For the listeners that don't know what a financial strategist is, how would you explain what you do?
Yeah, so I would say what we do is we have a lot of different, tools in our toolbox. So it's really just kind of a exploratory, just like, what are your goals? What are you looking? Are you a homeowner in a family with a W-2 that's just looking to game up financially? Or are you a business owner that's looking to mitigate taxes, create additional funding sources for business purchase, expansion, real estate investing? And then we can kind of, make personal strategies for your particular goals and what you got going on.
Nice. Do you have anything to add?
Yeah, I'd love to add. So one of the things that I love about what Monica and I do as strategists is you see us here, but we have a team of people behind us with experience up to like 30 years in the industry. And you talked about like tools available to billionaires and millionaires. And one of the things that is a tool that they have is what's called a family office, where they have the lawyers talking to the life insurance advisors, talking to the financial advisors, talking to the CPAs. And that's what we bring to everyday business owners. And so when we talk about strategy, we always say, like, we're not trying to even replace your financial advisor or your CPA.
Yep.
Yeah, like we want to plug in, complement them, and maybe introduce them to some tools that they just didn't have access to. And together, it benefits the business owner like immensely.
What is the licensing that you kind of have to get to be in this area or be a financial strategist?
Oh, wow. I say it's across the gamut. Like if you look up, there's so many you can get. I would say life insurance license is one that takes us very far, but we have people on the team that have like a Series 65 and just kind of across the gamut.
What does that first consultation look like?
So really it's just like 15 minutes to like start to get to know each other. And then from there decide, okay, yeah, let's keep it going, and then set up subsequent meetings. I would say that next meeting is like getting just a simple like download of numbers, like nothing crazy, just to see, where someone's at financially before we even figure out what path to start educating them on strategies.
So how can I really be successful if I'm getting a 30-year mortgage and I'm not even able to get the rent for that property?
The first way that you get educated in some countries like Australia and the UK and Canada, and the 30-year mortgage is actually only offered to people with bad credit. So here in the United States, you can come in with an 800 credit score and they're like, yeah, here's the 30-year mortgage. We're going to save you half a point or something like that, right? In that situation, like the 30-year mortgage is the scam.
It's really about the interest that you're paying and not the interest rate. And so that's one of the education pieces that we really find that we focus on, because so many people are taught to focus on what that interest rate is. And of course, it can make a difference when you're buying a house, but that's not the only piece of information to look at.
Why do we just keep getting back into these mortgages?
I actually go as far as saying, like, I teach people how to unlearn the 30-year mortgage, because you made a comment. Yeah. You like the interest rates barely drop and you get a phone call or you get a postcard and someone's like, save you $100 a month, but
dangle the carrot.
The carrot. and they're counting on us to do three things in the first 7 years: refinance the home, move or have to unexpectedly sell your house.
Man, if it continues this way, what do you think is going to happen if people just don't know? You think there's going to be a generation just without assets?
I do. I think what we have to kind of think about is switch that mindset into abundance and be like, okay, maybe the way for parents and grandparents doesn't work anymore, but what about the way for us, and how can we change that?
Mm-hmm.
I have nieces and nephews that are in their early 20s, and I'm
Yeah.
like, you can buy a home. It may not be the one you want at first. It may not be, you may have to have roommates.
Mm-hmm.
It may not be as desirable, but like whatever you can do, like however you can do it, try to make it work.
Yeah.
That's a huge misconception. Like
Mhm.
I get on the phone with people and they're like, my financial advisor told me not to pay off my mortgage. I hear that one a lot.
That's what I was just going to say. I was just talking with someone and I said, we help people, pay out their home in usually 5 to 7 years. And he's like, I'm not interested in paying off my home early. I want the tax write-off. And I said, well, our clients will usually, because they're paying off faster, they're building equity. They're using that equity to buy assets that can be tax advantage for them versus staying in the 30-year mortgage and just being able to write off the mortgage interest.
Oh, that's a good point, Monica. The misconception around how interest accrues. Monica,
Mhm.
you had a 4. Yeah. And I know
Yep.
you even have a 3, but I'm telling you, this 8% loan calculates interest differently, and it's actually going to save you like $300,000.
Yeah, and that's just for people. It's just like,
Yeah.
I think it's the biggest roadblock. People are like, wait, what?
For people who are financially responsible and are just trying to do things the right way, that this information is just never shared.
Yeah, I mean, I guess my thought is the banks, they can make much more money with a amortized upfront interest type mortgage. And so, again, they're banking on people that doing that kind of that 7 to 8 years where they're going to refinance and they start that 30-year clock, the front loaded interest all over again. So they don't feel like it's in their best interest. They've got a captured audience.
Debt, income, mortgage, and education. So can you explain what is that time framework?
The debt. So that's taking all the debt you have and just total it up. So let's say that debt is $500,000. Then there's the income. Like if a spouse either gets sick or passes away, how many years of income do you think you're going to need? Let's say you're making $100K a year and you have a 2-year-old and a 6-month-old, and you're like, okay, I think we need at least 10 years to stay home with the kids, get them through that loss. Well, then that's $1 million, right? So now we're at 1.5 million. And then there's the mortgage. Do you have mortgage debt, right? Did you
Yep.
include that? And then education. So we'll go back to that 6-month-old and that 2-year-old. Are you wanting them to go to private school? Are you wanting them to go to university, or, have a pot of money if they decide to become entrepreneurs and,
Yep.
fund that first business? So you take all that and you add that up, and that's the life insurance need.
Term life insurance and IUL and then whole life. So what's the differences between the three?
There's term, which covers you for a set period of time, whether it's 10 years, 20
20.
years, 30, 15. And then there's permanent life insurance, which once you get it in place, as long as you pay the premiums,
Mhm.
as long as it's a healthy policy, it can last through the lifetime. So that's like the main 2 buckets. And then when we look at the permanent insurance, that's going to be your whole life and your index universal life. Both of those accrue cash value over time. And how the cash value accrues is just going to be different between the 2.
The financial flow power hours.
So it's an hour long. And the first 5 minutes, we just we share, either you drop it in chat on Zoom or you unmute and you say, I'm going to work on this today. I'm going to organize my tax receipts. I'm going to finally set up that mobile financial app. I'm going to do whatever your thing is, right? And then we throw on some lo-fi or some classical music and we just we all get to work. And I'm working too on my stuff because this type of work helps me too.
Mhm.
And then at the end, we take 5 minutes and we celebrate our wins.
What will happen if you don't have a living trust?
What happens without a living trust is that all your belongings go to probate. And probate, just to start that process, is a court fee of 10 to 20,000. And then in the middle of all your grief, you have to go to court and you have to battle out the assets of the loved one that passed away. And if you don't have good relationships with your family, that becomes another emotional nightmare. And keep in mind, you've already lost somebody you really love.
What is probate?
It's basically the legal process of having to go into court and figure out where the assets should go.
What about the kids then? What happens to that? Who makes the medical decisions?
Oh yeah, let's go.
Yeah,
Because
that's-
this is a
that's
big part
whole-
of it.
yeah.
Yeah, you want to have those documents in place as well, because what happens if you become incapacitated? Like I mean, these are hard things to talk about.
Mhm.
And this is why I developed the financial flow power hour, so that you feel like you have a support system when you have to sit down and actually think
Get
about,
stuff done.
if I was on life support, what would I want to happen?
What about someone who's already has all of this kind of documented? Is there a best practice on revisiting it and updating it?
I think of it as a fluid document because
Mhm.
as your life changes and your kids grow up, there's, maybe your kids get married and you have grandkids. You buy a business, you have rental property, whatever it is, like you need to include all of that stuff. And so a good attorney and a good living trust like I said, very fluid. So things are going to come, things are going to go. So it's always, needing to be updated.
Are there tax write-offs through this program as well that people can kind of take advantage of?
You're still going to pay some mortgage interest with mortgage-free life. You're going to still have that write-off.
Right off.
But you're going to save, in some cases, on a 6% loan, like even a 4%, like $300,000 in interest. So is the $300,000 going to be less or more than the tax write-off? That's what I always ask people.
But what would you say to someone that says, I've made a boatload of money and I'm going to be paying a ton in taxes?
Don't wait until November or December.
Right.
Let's talk right now. Let's talk now. That's the thing with strategy, is like, think of the peace of mind you'd get if we met right now. Let's say March, we met and you
Mhm.
said, hey, Sarah, last year we paid $170,000 of taxes because we
Yep.
made up $500,000. Well, what if we plan now and we show you, well, we could actually save you about 80,000. Well, then that changes your savings profile. Now you're not stressed thinking, oh, I got to figure something out in the next couple months. So I would say, like, plan now.
There's a business exit blueprint. So what is that and how does that work?
Think of your planned exit, but then think about your unplanned exit. And we have 4 strategies in that playbook. The one that I love the most is, I'm going to make everybody do some math right now. So let's say someone's business is worth 10 million, right? So you take out your cell phone, you take 10 million and you multiply that by 0.4. That's probably about 40% in taxes, right?
Mm.
That's millions of dollars that the government is going to take if you sell your $10 million business that you've built, right? But what if you, instead of that, could take that 10 million in your calculator and multiply that by 0.02? What if instead you were taxed on 2% of the value of that company at that 40% tax rate? Well, now you've saved millions of dollars.
What about like stocks and crypto and things like that? Whenever there's profits, the short term is usually like 40%. And if it's long term, it's like 20%.
You can pay taxes on 2% of the value. So that's a business structure that we put into
Mhm.
place. And we talk a lot about it benefiting the business itself, but you can have other accounts sitting in that business structure, whether it's your crypto account, your stock account, what have you. And yeah, that takes the taxes down to 2% of the value, and you still have control of all those assets.
If I was in my 50s or 60s, I would be like, I'm too old to invest.
Mm.
Again, I'll just go back to my own personal experience. That's what I was feeling. But like, yeah, you can still make a difference. I could have made a bigger difference 20 years ago, but I can't go and change my past. But I can change my future, and so there's options.
What qualities do you think makes a good financial strategist?
I think that what makes someone a good advisor is an eternal student. And it's somebody who is willing to be like, you know what? The financial space is massive. I know that I don't know the answer to everything. But what I can do is I can find the person who has the answer for my client and work with them. Anyone thinking competition instead of collaboration in the financial space, the only person that suffers is the client.
So where can people connect with you guys online, your social media, websites, and phone numbers, and so on and so forth?
I keep mine really simple, sarahherrera.com. You'll find everything you need there. My phone number's there, my email, my social channels. You'll find everything you need information-wise at a high level, how each of these 3 programs work. And then there's a link there to book a vibe check with me, see if we vibe. I'm on YouTube as well as Instagram and TikTok, Sarah Herrera. And then my Instagram is BYW_financial. That stands for Build Your Worth. That's actually the name of my company. Yeah, Build Your Worth.
I'm on social, mostly Facebook, Instagram, Mortgage Free Life, Monica.
Nice. We'll get the social media handles in the description below.
Sure.
We'll get them on the screen. So people that are listening and not viewing it, if you want to just click into the description, you'll also get the contact information there. So
Cool.
we'll get it all plugged in
Yep.
for people to find it easily. So
Awesome.
We do a segment where the last guest leaves a question for the next guest.
Oh.
And the last guest left this question for you guys. And you guys can both
I love
answer
it.
individually. Is if you could think of one book that everyone should read, what would it be and why?
It's Rick Rubin's book on creativity. So sorry, I don't have the exact quote, but if you look up Rick Rubin creativity, it's a circle with a dot in the middle on the cover, and he talks about the power of leaning into creativity. And I think as business owners, sometimes we get in the weeds of all the information and all the technical and all the,
Mhm.
all of the tactics and that sort of thing. And I think that all matters. But I think at the heart, like we just all love when our inner child can create, and that's what we're all doing. So it made me fall back in love with creativity again.
Nice. Wow.
So my goal, and I got it from this book, is being 1% better today than I was yesterday. Atomic habits. That's it.
Yeah,
Yes.
yeah.
Yeah. And at the end of the year, like, look at that compounds.
That's powerful.
And so, because a lot of times we're talking about people feeling overwhelmed, but I can do 1% today and then again 1% tomorrow. And so
Yeah.
that really helps me where I don't get stuck day to day.
Yeah.
Mm-hmm.
Yeah. As they say, don't boil the ocean. Just make a
Yeah,
small
right?
change.
Yep.
Yeah.
You'll get there over time.
Yep.
For sure. Monica and Sarah, thank you guys so much for joining me today on this episode of the Keyconceptspodcast. It's been a pleasure.
Thank
Yeah.
you.
Thank
Thanks
you so much for
us.
having us. Yeah. It's been great.
Well, if today's conversation challenged the way you think about mortgages, debt, and taxes, that's the point. Financial freedom doesn't start with a lower rate. It starts with a better strategy. So thanks for watching this episode. We'll catch you on the next one.